Hello, I'm Ken Moraif, Senior Advisor at Retirement Planners of America, and this week's market recap video is once again going over last week. We had a very strong week with the S&P 500 index and the Dow, and primarily they're riding the back of the Federal Reserve, and the Federal Reserve hinting again this week that they're going to potentially lower interest rates later on this month, if not by September. And of course, cheap money is a drug for the stock markets. They love it. They want it. Give me more. And so we had a positive week this week. The interesting thing, though, is that if you look at history, what you'll see is that in periods when the Federal Reserve is lowering interest rates, historically, those are bad economic times. Why? Because the Fed's lowering interest rates to stimulate the economy. And so usually, if you look at periods of lowering interest rates, you're also recessionary and therefore bear market periods. So it's interesting that the stock market wants the very thing that's a bad thing. Now, the reverse is also true. When rates are going up, it's because the Federal Reserve is trying to slow the economy down because it's growing too fast. They want to keep inflation under control. So that kind of thing is a good thing. So here we have the Fed saying they're going to do lower interest rates because the economy is slowing down a little bit and they want to keep it going, and the market loves that. So go figure, right? But if you look at history, once again, that first year after the Federal Reserve starts lowering interest rate historically has been a very good one. The average returns are over 10%. And so therefore, we believe that being invested right now is a very good idea. However, as I mentioned, we specialize in retirement planning. So for our clients, people who are over 50, who are retired or retiring soon, protecting principal is a very, very important part of your retirement planning. And so even though we are bullish, we must always remember that the market can turn at any time, as it did in Y2K in 2008, and it can head south. And in retrospect, everything looks obvious. Gee, everybody should have seen that subprime mortgages were going to crash. That was so obvious. But yet everybody was investing in them, so they weren't that obvious. And all those dot-coms, everybody knew they were worthless. Those things were terrible. You shouldn't invest in those. It's obvious that they went down, but everybody invested in them anyway. So after the fact, it's easy to look back. During, it's easy to be invested in those things. So right now, the market is at all-time highs. It's the longest-running bull market in history, and the highest rising bull market as well. So time to take advantage of opportunity, but in our view, if you are retired or retiring soon, you need to also be aware that this is a time of great risk. The market can drop significantly and change your retirement plans. So in our firm, we believe that you should invest and also protect. And our strategy enabled us to advise our clients to sell in November of 2007 and avoid all the 2008 carnage that happened for too many people. So if you are in that category, retired or retiring soon, we'd love to meet you and see if we can help you. And our website, of course, is retirementplannersofamerica.com. Or if you'd prefer, you can type in the acronym, which is RPOA.com. All right, so I appreciate you watching this video, and we'll look forward to talking to you soon.